Hello, YouTube. We are now more than 9% off the lows. We have climbed the wall of worry, but we want to be very mindful that we are now starting to go into the upper end of greed, almost dipping into extreme greed. And the reason this matters is because the market usually takes a staircase up and the elevator down, with a key warning being when we stop going up. So we look back here to January, our big, massive rally that we got. At a certain point, we keep climbing the wall of worry. We keep melting higher. We stop going up, and then we kind of go down. So let's be very mindful of that today. This is an update for the bears. If you guys wouldn't mind watching all the way till the end of the video, I gave the bullish story on the weekend. This is for the bears. So if you want to see that bearish update, what I'm really talking about here is actually, I think I want to preview this for a minute or two here. So what I want to talk about is that we're going into earnings. We got big tech coming up. We're climbing the wall of worry, and it's been an incredible start to the year so far. So we got this extreme greed. Most people think that 1 in 2 people basically think we're going to close the year out like more than 10% lower, like back near the October low. So if that's the case, like we can definitely start going up, but like only 5% of people think 4250. We're like between 4,000 and 4150, closer to 4250, and people just don't believe it. So we can definitely go down, but the herd is looking one way. So maybe it's going to self-manifest. Let's talk about what that would mean. And for the bulls, this is where I think you have to be mindful of your team and what people who bought at the beginning of the year. Let's look at the heat map. Man, it's been incredible, right? Microsoft up 18, Google up 18, Apple up 26. Oh my goodness. We looked at what this meant. These 10 tech names have contributed more than 90% of all the S&P rallies so far this year. And for someone like me, I did something on the weekend. I raised my stops. As we're going into earnings, I don't want to sell too much. I have my insurance. I'm prepared for where I want to go, but I've now raised my stops, which means I don't want to lose more than a certain dollar amount, a certain percentage in my account. I don't want to lose more than that, but I don't want to sell my stocks either. Other people might decide to trim, which means they're going to create selling pressure, or they might decide to buy insurance like a put, which means there has to go be a short of the underlying. So let's think about what that could mean going into this week, because if enough bulls take profit, again, keyword if, that could create enough selling pressure for the bears to finally capitalize on their big short. So that's really what it comes down to. If we're going to stop going up, it could be any catalyst. It could be this week. It could be sooner. It could be later. I don't know. Staircase up, boop, 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 boop. We stop going up, and then eventually we can stop going down. I'm going to ask you for a huge favor, please, and thank you too. If you could please consider smashing that thumbs up and subscribing to the channel, that would be greatly appreciated. And please make sure you drop me a comment and tell me that you heard the warning. And at least we need to be mindful that maybe we want to protect our account, even if we are bullish. It's not time to be buying a lot of fresh new trades, because like this is not what we do. A month ago, we were at 28. No one wanted to buy. And right now, everyone's like, man, you want to give me a bullish story? I don't want to hear about that. Tell me about the bear. Tell me about how we're going to go down. And since this period about a month ago, we're going to look at roughly April 15. What's happened? Well, I told you, we're up by 10%. So what happened? Man, it's been getting quiet out there. No chirping by any of the bears right now. They've been humbled. So if the bears have been humbled and the bulls are starting to get maybe extra greedy, if we get into that extreme greed, staircase up, they start getting complacent, that's the chance where we could stop going up. And why does that matter? Because our seasonality chart tells us that at some point we will stop going up. And unless we print that new high of the month in April versus March, in January and Feb, I'm a little bit skeptical. So what that means is that if we now look here to our weekly chart, let's remove everything. Oh, hold on. Let me just double check here. I think I might have been an error. Here we go. Let's go bring the lines back. Let's go 1 week. Let's bring it over here. There we go. So what this means is, let's delete everything. On the weekly now, this is really significant because when we look here at the SPY really close, I'm going to make it nice and zoomed in for those boomer eyes. And that's just a joke, by the way. I'm not making fun of anyone. It's just easier to see this if you're on your phone or whatever. So we look at where we open this week, basically flat. We push down. We test the relative weekly high here at 41192. We recapture it into the close of the candle. Why does that matter? Because we have an inside bar on this week. We're higher than the big pump, and we've now tagged the previous weekly high. So if the bulls are now in control, I want this low to hold. I don't want to see us revisit 409.7. Why? I mentioned on the weekend, encourage you to watch it, that we're currently looking for monthly expansionary territory. So last month's high, which is the same thing as that weekly high we just looked at, 409.7. So now we have that same tail. We've defended a low. We got a weekly higher low, as I just showed you. The problem is that if we do get a leg down here and we lose 409.7, we could go a lot lower. How much lower? 380. So that's like a lot lower. It's 34 points. So for me, I'm starting to jam stops on certain names. I've already trimmed. I've taken profit. Now I'm raising my stops. So my stops might get hit. That's okay. It's part of how you are able to survive the trade another day. So without getting too complicated, we're at an inflection point where normally it's the best time of the year. No one believes it, right? There's only 5% of people who think 42.50. What are we at right now? So ES is at 41.77, but we look at SPX. SPX is at 41.50. It's a lot closer to 42.50 than 4,000. So is like everyone wrong? Is there still juice to squeeze out from these bears? Or are they going to have a collective effort to take us down? As I noted, the selling pressure from the bulls could be enough to kickstart the crack of the uptrend, and then the bears could capitalize on it to take us down. Another piece of evidence here would be if we look at SMH, because SMH on the weekly chart, let's go back here to our weekly. We got double lower highs and double lower lows so far. So I don't like how we're printing lower lows. This is a failed breakdown. We're hanging out around these lows for like too long. Last week, tried to rally up, couldn't quite make it over the top of my box, slam it back down, and then open flat, sell off, come back up. I don't want to see us red tomorrow, especially into Wednesday. If tomorrow's the red day, I want to see these lows hold. I want to see the daily higher low. I want to see the 50 MA hold on SMH. I want to see the daily higher low hold on QQQ, which means we're pointing up. I want to see SPY hold its daily higher low as well. And I want to see us continue to go higher because I need, not want, I need to see 418 broken soon, like before the end of the month. So thinking about these big tech, we got Netflix, Tesla, TSMC, and other big tech are coming out after. So we talked about how, briefly, how 10 stocks have done 90% of the move. So if we get the elevator down from a single name, remember, Netflix elevator up last earnings cycle is what kickstarted us higher. Are they going to do the same thing? Or pretend, again, for the bear story, that we're prepared that if we do go down, elevator down, not like, oh my God, elevator down. Netflix could cause it. Tesla could cause it. Other stocks could cause it. I don't know. So we have to just be prepared for it. Time to start getting ready for summer. And if we think about the one-day heat map, we note that, okay, well, banks are actually flying now. So we looked at the year-to-date heat map on the weekend. Oh, my goodness. Like, banks aren't that bad anymore. Yeah, they're still stinky. Don't get it wrong. Some healthcare is bad, but it's looking a lot more breadth and depth. The challenge is just, are people going to want to sell their Apple, their Microsoft, their Google, their NVIDIA? Why? Well, because if they decide to sell, exit, not just trim, that's a lot of selling pressure. That could give back 90% of the S&P's year-to-date gains. So if we understand those stocks, and we also still understand that the bears might try to create a negative story out of this big tech. We look at one-day performance. Google's down by 2.6 on that Samsung headline about Bing taking over for their devices. Google's down by 2.6. Microsoft's up by 0.9. So there's not more gain for the winner than there is for the loser, which means it's starting to give us a law of diminishing returns. Positive news is not giving us as big of a boost. So these bears might try, again, keyword being try, to capitalize, even if it's good news this week, to try to take it down. I think they got to at least try. On the other side here too, on the bear story for stocks, hedge funds go all in on the dollar. Broad bearish bets for the first time in over a year on DXY. So this is really interesting. So these are bearish bets, right? Let's see what happens. I'm not entirely sure, but it's starting to get a little bit spicy. We also have Fed's Bowman talking tomorrow, the Fed Beige Book. We got Goolsby, Williams, Waller, Mester, Bowman, Bostic, Harker, Cook. Why? Because the blackout period's coming, starting on April 22nd, or just after 420. We're going to note that the Fed speakers can't speak anymore until February 4th, post FOMC on the 3rd. That's really important. Let's go through a couple more quick things here because Google reports on the 26th. That'll be next week. And as we noted before, these stocks are really important. Going to beat. Let's look at Apple. That's a beat, 147 over 153. Let's look at Microsoft, flexing 226 over 222. Man, things don't seem all that bad. Nope. Meta, 214 over 197. You got it. And then NVIDIA, 96 over 91. That is a beat. Expected. Again, let's not count our chickens before they roost. But as these things start to report, It looks like we could get that pump higher, like I talked about on the weekend. So if you want to watch that video, it is now queued up here on the left-hand side. If not, thank you so much for watching, and I will see you tomorrow.